The 5 semiconductor stocks that we are talking about today are up a combined 370% this year. Now, some investors think they're just getting started. Others say buy them now before they double from here again. And almost nobody thinks that they're slowing down anytime soon. So today we're looking to see if they're actually selling at a price that is below the value we want to buy it at. Now, Intel is up 151% this year, the single biggest gainer on our list. So let me explain what this company does in very simple terms. Intel makes computer chips. Think of a chip as the brain of a computer. It's what makes everything run. For decades, Intel was the company making the brain inside almost every laptop and desktop on the planet. That little sticker on your PC or your laptop that said Intel inside, that was them. But in recent years, Intel has fallen behind. Competitors like AMD made much faster chips at lower prices and took away market share. I think at one point Intel had 93% market share. That is down significantly now. Nvidia dominated AI chips and Intel missed that wave entirely. The stock was absolutely crushed for years. So why is it up 151% this year? Why is it up 5 times in the last 1 year? Well, 2 big reasons. First, they have received a vote of confidence from both the U.S. government, who actually took an $11 billion stake in the company, and Nvidia poured another $5 billion into Intel. Now, what matters far more is that the company actually started to show early signs of a successful multi-year turnaround in its most recent earnings. We covered it on our EM Plus channel, showing the stock jumped over 20% in one day, thanks to 7% revenue growth and a massive profit beat, driven by gross margin expanding to 41.5%. And guys, that is not a small task. And remember, gross margin is the profit on every extra unit. It doesn't include overhead, doesn't include income taxes. It's just the profit on selling that one extra unit. Now, the question now is whether that 151% run has already priced in the recovery or whether there's still real value here. So let's go find out. Guys, what's amazing about Intel is this is one of the stocks we use as a prime example for companies that can go sideways for a long time. It finally hit an all-time high after this recent surge. Look at this parabolic rise, completely straight up, guys. It did not surpass the 2000 peak until literally the last few weeks. In the last few weeks, let's see the exact date. Yeah, basically in May. Incredible, guys. 1 year ago was at $19 a share. Then it hit 100. That's 5 times over 5 times in 1 year. Absolutely insane. But is it actually making sense, guys? This company lost $3 billion in the last year. $3 billion in cash flow loss. The 5-year average cash flow loss, $7.7 billion. So remember, guys, no matter how great a business is, how exciting the story could be, the price you pay will determine how successful you are from an investment standpoint in the long run. So make sure you understand what you're buying and then pay a reasonable price for it. Ignore all the noise around you. Ignore the stock shooting up parabolically. Now, one last thing. If you enjoyed this video today and you want to see a breakdown of all the 12 moves I am making in my portfolio right now, the strike prices, the reasoning, the full breakdown, click right here to watch that video. Thank you for your time.